Hello, and welcome back to Boni's Life. This week, we're doing something a little different, something I plan to make a regular feature here on the channel. We're holding ourselves accountable. We're going to look back at the predictions and analysis we shared over the past 7 days, see what we got right, what we got wrong, and most importantly, what it all means for your trading strategy in the week ahead. It's easy to make predictions, but it's the follow-through and the analysis of those calls that makes us smarter, more profitable traders. So, let's dive in and review the tape. The past week in the crypto market has been a textbook example of a showdown between bulls and bears. For most of the week, the market was in a tense consolidation phase. Bitcoin was trading in a tight range, coiling up like a spring, and we were all waiting to see which way it would break. The general sentiment, as we discussed, was one of cautious optimism, but with a clear understanding that we were at a critical inflection point. The week ended with a decisive move, but perhaps not the one the bulls were hoping for, as prices took a bearish turn heading into the weekend. So, let's talk about our predictions. How did we do? I've gone back and reviewed the analysis from our recent episodes, and I'm proud to say that our identification of the key market dynamics was incredibly accurate. Now, we said the key battleground for Bitcoin was the zone between the strong support at approximately $114,000 and the formidable resistance at $118,000. And that is exactly where the fight took place. The price bounced between these two levels all week, confirming that our technical analysis had pinpointed the most important price zones. We also talked extensively about the Federal Reserve's interest rate decision. We predicted that the Fed would cut rates by 25 basis points, and we also said that this move was largely anticipated and already priced into the market. When the announcement came, the market's muted reaction confirmed our analysis. There was no wild price surge because, as we discussed, the smart money had already positioned itself. Our accuracy on that major fundamental trigger was spot on. Furthermore, we highlighted Ethereum's relative strength and the growing institutional interest in it. For most of the week, Ethereum did indeed hold up stronger than Bitcoin, and the narrative of an institutional rotation into ETH continues to be a dominant theme. So, if we were to put a number on it, I'd say our analysis of the key levels, the fundamental triggers, and the underlying market narratives was about 80% accurate. We gave you the map of the battlefield. The market just chose the bearish path at the crossroads. Now, for the part that's arguably more important, where did the market surprise us? The biggest surprise was the lack of bullish momentum to break through that $118,000 ceiling for Bitcoin. The bulls tried, they really did, but they just couldn't muster the strength. The bears, fueled by a strengthening US dollar and some concerning technical signals that we'll discuss, came out in force and won the battle for the week. This is a fantastic real-world lesson in why we always preach the importance of risk management and being prepared for either outcome. You can have the best analysis in the world, but the market will ultimately do what it wants to do. So, where does that leave us now? The market's character has clearly shifted, and the short-term trend is now bearish. Bitcoin has broken below that consolidation range and is now testing lower support levels. The new critical level to watch is $107,300. A decisive break below that could signal a deeper correction is underway. For Ethereum, it has broken down from its own consolidation pattern, and traders are now looking at the $4,000 psychological level as the next major support zone. The momentum has shifted, and we must adjust our strategies accordingly. This brings us to the reliable triggers you should be watching for the week ahead. On the technical side, the game has changed. For Bitcoin, the old support at $114,500 is now the new resistance. The bulls need to reclaim that level to have any hope of reversing the short-term downtrend. The key technical indicators have also shifted. The MACD, which we noted was bullish last week, has now had a bearish crossover on several timeframes, which is a signal of downward momentum. The RSI is in neutral territory, but it's pointing down, suggesting the bears are in control. On the fundamental side, the narrative is no longer just about the Federal Reserve. The new main character in our market story is the US dollar index, or DXY. A strong dollar is typically a headwind for risk assets like crypto, and the DXY has been showing signs of a strong bullish reversal. This is a major fundamental trigger we all need to watch closely. We also have a packed economic calendar, with more Fed officials scheduled to speak and the crucial PCE inflation index being released this Friday. Any surprises there could bring another wave of volatility. Finally, I want to talk about the reliability of this channel. This new weekly review segment is our commitment to you, our community. We're not just here to throw predictions at a wall and see what sticks. We're here to build a transparent, verifiable track record. Each week, we will analyze our calls, celebrate our wins, and learn from our misses. We believe that by holding ourselves to this standard, we can all become a community of smarter, more informed traders. This is how we build trust, and this is how we improve. That's all for this week's review. It's a tricky market out there, no doubt about it. But by staying informed, analyzing the data, and managing our risk, we can navigate these choppy waters together. Thank you for joining me today. Don't forget to hit that like button, subscribe to the channel, and ring that notification bell so you never miss an update. And I truly want to hear from you in the comments. How did your trading go last week? Did you see the bearish turn coming? Let's discuss. I'm Boni, and this is Boni's Life. Stay curious and stay profitable.